us. And now let's have a look at the data with Ash. What's the data telling us this week, Ash?
Oh, it's quite fascinating, actually, potentially we can get right out in front from what the data is telling us. I want to bring everybody's attention mainly to the Aussie again. We haven't really seen the Aussie take flight as yet, which would be in accordance to the COT data. But let's see if we can get a few things to line up. But if you look along here, this is what I want to bring everybody's gaze to. You look along here, we see 100% positive in the positive area on the index, on the 3-year, the 1.5 year, and the 6 month for the Aussie dollar. Shorts increased a little bit last week, so it's not really kind of giving us a timing tool necessarily, but it's certainly saying that the commercial traders at this current stage are building up Aussie positions. And if we go now down to the dollar, then we will have a look and see 24 isn't quite low enough on the 3-year. We'd really want to see that under 20. So when that tips down just a little bit more, then that would be a really good signal for us to suggest that the commercial traders really are coming out of supporting the dollar. On the 1.5 year, we got 0, so it's right down the bottom, so that's a short signal. And on the 6 month, it's at 0, so that's also in the near term a short signal. When we look at the commercial percentage change from last week, which we looked at earlier on with the Aussie, not a massive difference, 8% to 12%. So 8% increased their long positions, but 12% increased their short positions. Not a huge difference. If we come down to the dollar, negative 30% on the long positions. So it's not that they're going short, but the percentage change was there are less. There's less interest in buying up the dollar from last week. Short positions increased theirs by only 1%. So not necessarily sort of saying right now is the time to get bearish the dollar, but it suggests that either the buying positions are there's enough buying positions in the market already, and they're quite happy to hold on to positions and not add to any more. Now, if we bring in the seasonal indicators of this is where things start to get really fascinating. So looking at the Aussie, actually, let's look at the dollar first. Dollar first, what we're seeing here is that the dollar tends to rally up till around about the start of October, take a bit of a dip, and then rally up again to around about the middle of November before taking a big dip right the way through to February. Now, the dollar index is made up mostly by the euro. So when you look at the basket of currencies, it's not absolutely evenly spread between all of them. And the point of saying that is that just because the dollar looks like a long, it doesn't necessarily mean that if the Aussie also looks like a long, that we have got mixed signals. It just means that the dollar against mainly the euro tends to be quite positive here. Yes, the other currencies are part of the calculation, but they make up a much less. They make up much less weight on the dollar index. So this suggests the dollar index is likely to kind of hit the brakes around about November time before starting to come down. If we look at the Aussie also suggests that we would potentially sell off into October. So that the seasonals are saying that we don't agree with the COT data right now. We're not saying that the timing for the seasonal bias to kick in is yet, but sometime in October, it does kick in, and it kicks in right the way up until November before it gets a little bit sticky. Now, the reason that, as I say, this starts to become fascinating is then we start to switch to our technical charts. And if we switch the technical chart over to the Aussie dollar, what we have here is a pattern. This looks like a pretty good level of support down here. And this is one of my favorite patterns. It's the head and shoulders pattern. And we can see that if we were to, what's great about analyzing head and shoulders is that when you get kind of somewhere around equal length of time between the left shoulder and the right shoulder. So if you were to draw a shape on the left shoulder here, what you'd be looking for is the right shoulder to be around about the same size. And that may start to give us an idea of when this one could start to rally. So if we have a look at this, this is, I did this one earlier on. So you've got a left shoulder here, a right shoulder here, and this would be the end of it. Now, what we'd expect from this is that the Aussie dollar would continue to weaken somewhere into this region, which is around about the 0.7 level. And then possibly start to mess around about here, but we'd be looking for the rally sometime around about the end of October. If we bring this back here into a daily, then we'd see that this would actually be going into goes into around about November, which starts to become interesting because that would also push into when that dollar index starts to weaken. So somewhere in this period, now it's not going to be absolutely perfectly aligned with the left shoulder, and this left shoulder may be that needs tidying up a little bit. You know, it might not be exactly this amount of bars where that left shoulder started, but it's somewhere in that region, somewhere around there. In actual fact, this looks a bit big, so let me just get rid of this a second and copy it again. And all I've done is I've taken exactly the same size, brought it over to where around about that left shoulder begins. It's actually here. Now this says that that's going to be the end of October, 25th of October to be exact. That would give us pretty much the same size left shoulder and right shoulder. Then if we come back to the seasonal chart, so we're looking at sometime at the end of October, that would suggest, come back to the seasonal charts, then we see with the Aussie, October is the time it starts to really rally. So I want to see the technical picture line up, and sometime in October, as I say, it might be, you know, give or take around about the middle week, depending on what the COT data still suggests and the seasonal suggests, that we could be looking at technical analysis to give us a buy signal on the Aussie dollar. Not there yet, interestingly, but if it does come sometime, you know, in this next month, that would start to fit with the commercials, and it would start to fit with the seasonal patterns as well. So Aussie dollar for the next month, being on the lookout for the Aussie dollar in the next month, mate, is what the COT and the seasonals are starting to suggest.
Well, I really like that. I was, I remember at the very start of my trading journey, I used to sit around with Leon in Denmark, and you guys know Leon's now chief analyst for a major European bank. They traded hundreds of billions of dollars, and he used to say to me all the time, he used to say that the problem with retail traders is the trading in the dark. And I used to sit there and nod, go, oh yeah, got it, yeah, they're trading in the dark, they've got it. And I had no idea what he was talking about, right? But I didn't tell that to him. I was not an idiot and anything. And the last three sessions that we've just done, this is the stuff that retail traders don't have as far as the light switch goes. That's the macro market overview. That's the understanding of fundamentals. It's about understanding what the data is telling them. This is the stuff that puts them back in the game of the professionals. Right? This is the stuff that goes, oh, hell, I was looking at doing this, and actually this stuff tells me I'm wrong, and I've got to wait for this opportunity. And these are the things that can give retail traders a chance to get back and trade in the light. Or you can turn your light switch on, whichever one works best for you guys. But I think that this kind of stuff is really insightful. I like the hidden shot. You know me, Ash. I'm not one of the things that's part of being a trading team, right, is that there are people in our organization that use all kinds of indicators that I'd never use. And that I'm not a big fan of head and shoulders. For me, head and shoulders tell you when something's going to happen. What's going to happen perhaps becomes clearer as it unfolds. I think people go into head and shoulders with an expectation of direction. I'm not sure that's always what the head and shoulders tells you, but you use it and you use it really well. And that's what trading is, right? You find your tools and you use it really well. And I was really interested in that timing thing. So I'll be keeping a bit of an eye on my head and shoulders and seeing if I can do a little bit of that kind of stuff with the boxes and get some dates, because these are the things, you know, again, 99% of retail traders are early on every move. They go before the pros, and the pros have got these things that hold them up. And if that's one of the things that hold you up, Ash, as well with them. So thank you very much for the insight, mate. Really interesting stuff, and we will keep a really close eye on it. So cheers, mate. Having had a look at the macro and the fundamentals